if this deal doesn't go well, what are the things that you see are the risk here? So when you're looking specifically at the deal, what I would say is, does it meet your investment goals? Is the time horizon right? Is it achievable in the sense this group has done other deals and they have some track record to show that they could do something similar? Does the business plan make sense? Again, I quote Warren Buffett a lot. He says, we never invest in anything that we don't understand, right? So if it doesn't make sense to you, then don't invest with it.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. We have Bronson back with us again today, and we're going to jump into evaluating that syndication deal. As a passive investor, what should I be thinking about? What are some things that should be important to me as I think about moving forward before investing? And even some of the specific strategies to protect investors around market swings, and even some advantages for investing in a syndication. And then we dive into some of the more specific questions around Bronson, even his book reading habit, which is very impressive, by the way. I know you're going to learn a lot from Bronson today. Bronson, welcome back to the show for another day. I'm grateful for the listeners as well who are with us, and I hope that you will go back and listen to the last 2 days with Bronson. We have talked about many different topics and even his path into multifamily success, which took many different pivots that he probably didn't expect, but I think it does for all of us. Our paths take many different pivots, but he was willing to step out and leave a what most would say a very successful job to take a chance on himself, and thankfully he did that. But then even yesterday we talked about just the economic climate and different ways that he is funding his deals, even when the appetite investors are softening, and about why he still believes in multifamily and why I do as well. But Bronson, welcome back to the show.
Awesome. Great to be back, man. I feel like I'm becoming a regular here, and maybe let's just talk every day. This is,
yeah,
this is great, man.
Should.
Thanks for having me back.
Yeah, I'm honored to have you back. Let's jump in. I know you dove into this investing business and real estate and just everything that's happening in the economy right now, which we talked about yesterday quite a bit. But how are you evaluating syndication deals right now? Just in your opinion, or maybe even how you guide passives to evaluate a syndication? And maybe you can talk at a high level, but then also let's dial it into today, right? To this current economic climate, if there's any changes there in your opinion.
Yeah, so that's a big couple questions there. So first of all, when it comes to evaluating
just thought
deals,
I'd start off real easy today.
Yeah. You just start with drop the bomb. Here you go, mic drop, take it over. So yeah, I think when you're looking at deals, there's really 3 parts I encourage people to look at as passive investors. Is you have the market. So that's kind of the biggest thing. What market are you buying in? Then you have the operating group that you're working with. And then you have the specific deal that you're considering investing in. So I want to take each one of those, kind of how they look. So if you buy in the right market, and it's a growing market where you have population growth, job growth, income growth, you can do a lot of things wrong in the management of that property and still do phenomenally well. And why is that? It's because the rising tide will raise all ships, right? So if you're buying in an area, let's say, not picking up people in Cleveland, but in Cleveland, population is flat or declining, right? So that you don't have population growth, job growth, income growth. Maybe you have other forms of growth, and people might send me angry emails that, okay, actually can do things there, but it's a different type of market, right? Versus where we buy in Jacksonville, Florida, we see 20,000 new people moving to Jacksonville every single month, right? There's a 97% occupancy in the city. So we see this market that's growing. We've got jobs. We've got people that are moving because of COVID. They can work remotely. We've got people that are retiring that want to live in Florida and pay no state income tax. You've got all these things that are here that are causing growth. So if you just have people moving there, you've got more jobs there, you have more income there. That's a great, great place to be. Second thing is the operator you're working with. Now, if it's somebody's first deal and there's nobody on the team that has more than 5 or 10 years of experience, you might want to say, well, I don't know this, how solid is it that they're going to be able to achieve this business plan, right? Because you want to make sure that all 3 of those things line up, right? The market, the team, and then the deal. So when it comes to the team, I look for, what's their reputation in the industry. How you figure that out is by going to events, by asking around, by a lot of just, maybe even searching online, trying to figure out, maybe talking with other investors that have invested with them. And you try to figure out, what are their core values? And I think a great question to ask operators is, what's something that didn't go according to plan? And how did you deal with that? And if anybody does not have an answer for that, I would say do not invest with that group, right? Because all these deals, they don't go as planned. They go in certain areas better than expected. They go about as expected. And others, this went worse here. And there's so much learning that happens. Even people that I know, one of my partners has had 28 years of experience and 13,000 units, right? So my inexperience is not a big deal because he's got so much experience with the asset management. So that's the second thing, is just really making sure you got an experienced team where the values line up, the goals line up, the time horizon. You ask them, if this deal doesn't go well, what are the things that you see are the risk here? So when you're looking specifically at the deal, what I would say is, does it meet your investment goals? Is the time horizon right? Is it achievable in the sense this group has done other deals and they have some track record to show that they could do something similar? Does the business plan make sense? Again, I quote Warren Buffett a lot. He says, we never invest in anything that we don't understand, right? So if it doesn't make sense to you, then don't invest with it. So I think that's a lot of things. And I think some people get stuck at this point because they look at like 5 or 10 deals and they can't figure out what to do. But my thought is just look at 5 deals and then choose one and invest with it. It'll probably go fine. And then you'll learn along the way, right? Regardless. So that's just kind of from a high level.
Yeah, no, I love too how, and many of those things we talk about, as far as evaluating, a new investment for a passive investor. But one thing I love that you brought up there is alignment of goals and values. Because I know operators personally that, they've produced amazing returns for a long time for investors. And I invest passively in numerous projects and other operators as well. Okay. But my whole point is, I know some operators who maybe they have this amazing track record, but I just personally wouldn't invest with them because our values would not align. And it almost goes back to another segment, you and I were talking about, just about how tenants are treated and how we care about our communities and those things. Right. And so I want our values to align. I want to make sure that, hey, I'm investing in a business that we would have the same or alignment of goals, right, and values and caring about these people. And so I just love that you brought that up. And I feel like the operators crucially important long before the deal, right? Long before you ask any questions about the deal. Any thoughts around just the current economic climate and investing passively, or any change of where you would put your focus as far as evaluating? Let's say all the operators are created equal. What would be the next thing as far as the current economic climate that you would focus on?
Yeah, so we talked a little bit about this yesterday, just about why I think it's a great time to invest in multifamily, just because of interest rates being higher. I think is actually a benefit in some ways to be able to readjust later to lower rates, which will cause valuations to rise. But I continue to, and again, this is not a popular view. And again, I'm not even sure, maybe this is your business models. I don't mean to be, if I say something that, is different than where you're at. But when it comes to Class A apartments that are brand new, I personally think that it's a higher risk type of proposition right now, because I think when you have a Class A apartment, you're assuming rents are going to continue to rise, right? There's no value to add, right? So if you're buying a brand new or a new construction or a new build, there's some risk there that, like in Pasadena, California, where I live, rents are $4,200 a month for a 2-bedroom. Well, if there's a serious recession, they're not going to get $4,200. They might get $3,500. They might get $3,000. It's the people that are in Class A apartments. Those people move down to Class B, or they move down to Class C, right? They change or they move down. And so, but when you have a value add component, which just simply means you're going in, you're doing renovations, you're doing landscaping, you're doing stuff on the exterior, you're doing individual unit stuff, it gives you this margin of safety that really there's a bump in the value, because it's different than single family. Single family is based on what did this comp property across the street or across town sell for, right? Multifamily is based on the income, how much income is actually coming in from the property. So it's a different way we calculate valuations, right? So if we can increase the rents or increase the other income from laundry or from parking or other things like that, we're dramatically increasing the value of that property. So I think that when you have a value add component, it puts a huge margin of safety in a deal versus something where there is no value to add.
Yeah. What about any specific strategies maybe you've used to protect investors from these market swings?
Yeah, so I think really kind of what you mentioned as well, I can't remember was this today or yesterday, but the idea of just being very conservative on your underwriting. This is a term that people use a lot. It's a core value of ours, but I think what it really comes into, there are a couple numbers. One is your rent growth assumptions, right? You can take any deal that's a terrible deal and make it look great if you just have huge rent growth, right? So we typically, even in booming markets, we typically never go above about 3% projected rent growth, even though rents are growing in certain markets that we're in by 20% or more, right? So being very modest there. Also, the cap rate at exit. So cap rate is just the value, how much you're paying for how much income you're getting. And as cap rates are, some people project that, cap rates are going to keep going down. Well, you need to project that they're going to go higher, which would be less favorable when you sell, but just to be prepared for that, right? So our goal is to be modest on our projections and hopefully achieve them or outperform them. And I think it comes down to really investor expectations. But I think those are a couple of things just on being conservative side.
Yeah, no, that's great. Is there any specific opportunity that you could use as an example, maybe to talk through even some of the conservativeness on rent growth or exit caps? It doesn't even have to be your deal, or maybe somebody else's, or something you've thought about investing in, maybe you didn't because they had these assumptions.
Yeah, yeah. So I think it comes back to just the idea of really understanding the deal. Like, what is the biggest risk in the deal? And every deal, and again, more than real estate, we do real estate related stuff, but we talk about other assets like our ATM machine fund. We do, I do things in the precious metal space or the energy space. So whatever deal you're looking at, you always want to think about what is the downside, what are the risks there. So I think of some risks are being the problem is if your projections are too lofty, it's really hard to see, are you going to be able to get that upside? And I've seen there was a deal I looked at recently. Of course, being somebody who gets involved in deals, people want you to come and be a part of their deal and raise money or be a part of the management team. And somebody had a deal, I think it was like a 2012 build or something. So it was built more recently. They called it an A- value add. And I'm thinking, well, it's only 10 years old. Like, how much value really could you add to this, right? But there are ways to add value. I'm not saying it's wrong. It's just, to me, it's just not something that I've done, focused on kind of the newer value add stuff as well. But I think, I've seen deals where people, their assumptions are just that everything's going to go perfect. From day one, we're going to be able to increase rents. We're going to have all these things, or even operators are communicating that, yeah, we're going to start giving distributions really early or really consistently. And it's like, some of it just has to depend on how the deal performs, right? So I don't know. I mean, I think it's more of a feel that I get when I read it. That's the challenge. Or when I look at a deal, is it's not just one thing. It's like, when I really look at it, I want to think, do I feel like I have a sense of where this operating group is coming from? Are they looking at the downsides? Do they have anything in there that says, hey, if this doesn't go well, here's what we get? Or maybe there's a sensitivity analysis that, okay, if rates are here, or if our cap rates are in this area, this is what we'll get paid, or and it just gives more options, right? So you're looking at it and you feel like at least the operator has a plan for if the tide turns and things go the other way. Because the longer you do this, Whitney, as you know, the more you realize there are things you can control and there are things that you cannot control. And you can control a fair number of things, but a lot of things you cannot control. So it's really how you manage those things before you get into a deal that's really, really important.
That's when you can make changes, right? Before you get into the deal.
Exactly. That's it.
Yeah. I appreciate you bringing that up. Yeah. That's when it's important that you think through as many possibilities as possible, right? And knowing that you're not going to know them all, right? You're not.
It's like getting married, right? Like, the time to due diligence is before you get married, right? It's like once you're married, you're like, oh, you're married. It's like, you want to make sure that you've really taken a good look at everything and that it makes sense.
That's right. That's right.
That's dating advice there too for those.
Maybe you need a reserve budget before getting married. Right?
Yeah, exactly. Yeah, right. Contingency budget.
As far as even something like that, like a reserve budget or anything around that you like to see, or maybe that you're doing personally right now, how do you see those things so you're prepared for the downturn when it happens, or worst case scenario, or the unexpected? What are some things that you're important to you to have in place?
Yeah. So, I mean, contingency is huge. How much per door? Is it $250 per door per year? How much is it that you want to have in place? You want to have contingencies in place for, okay, these expenses cost more, these renovations cost more, it took longer than you thought, you're not able to get the income in the time frame that you thought. And so just that you have a plan, and then you think through, like, I get this question sometimes, well, do you guys ever do a capital call? And like, no, we haven't done a capital call, and I'm grateful. But I say there's 5 things we'll do before we'll get to a capital. I have a plan for this, right? So we'll take out, hopefully we'll be more conservative on underwriting. We'll have extra reserves. See if I can remember all 5 now that I'm on the spot here. If we had something really difficult, we could withhold distributions for a little bit, saying, hey, we have this expense, we've got to do this. Hopefully insurance could potentially cover something if there was something catastrophic that happened. We could make a personal loan from the general partners to the property if we needed to. And then the last thing we would do is a capital call, right? Is a voluntary capital call. So those are things that what happens. And that's a great question too, as a passive investor, is what are the things in place? Have you ever had to do a capital call? Well, what are some things in place that would try to prevent that, right? A capital call is just, hey, we need more money. We ran out of money, right? And that's kind of like in any business, you never want to run out of money. So if there's plans in place that you have enough money, you're well enough capitalized, and it is a balance, because if you have too much money, then your returns are lower than they should be, right? Because you raised too much money. And if they're too low, well, then you're going to feel it in the returns, or you're going to be pinched on cash flow or operations, and neither is good. But I think if you're going to go one side or the other, have a little bit more money than you need.
Yeah. Can't remember who the entrepreneur was I heard say this, but ultimately, no cash, you crash. Mm-hmm. Right?
Yeah. Yeah.
Got to have it. But no, I appreciate that. Even you elaborating on the 5 things there. I mean, I love that plan too, even on just that, that you and your team have a plan, right? This is the order of things. When it hits the fan, this is what we're doing.
Yeah.
And so everybody knows and you're on board. What's a way, Bronson, that you've recently improved your business that we could apply to ours?
I think way to improve our business. I mean, I think you're always looking to try to find a way to improve it, right? We're always looking at how can we operate more efficiently. I think one thing that's really helped us is we have 1,500 units just in Jacksonville. So we've actually hired a full-time asset manager because it got to be my operating partners. It got to be too hard just to go around and check to make sure the property managers were actually doing all their stuff they needed to do. So we hired a asset manager to help with that. So I think as your team grows, it's helpful just to have more people that can help with that. And I think if the deeper you can go in one market, more deals just kind of come to you. They find you. People come to you and say, hey, we've got this off market thing. Or a seller says, hey, I want to sell you. We worked well on this other deal. Let's sell you another one. How can we make it work? Right. So having, being deeper in a market, continue to develop is really helpful. And I think when it comes to, I guess, a little more on the active side of how we work with investors, we're continually trying to find ways to communicate and create resources and value. And just really, what are the things that investors are looking for, right? They're looking for communication. They're looking for transparency. They're looking for similar values. And just anything we can do to try to help facilitate that is good. So I think the operational side, there's a lot of things that just come from experience and time and working with, I guess, the more you get to work with a property manager, the more you get to work with a construction manager, you just figure out who it is you work well with and where the issues are. And so experience, I think there's really no substitute for having someone on the team, at least on an operational standpoint, that's very, very experienced. And so if somebody is listening and they are operating a deal, or maybe they're raising money for deals, having somebody on your team that just can see a problem before it happens is so, so valuable.
So valuable. Yeah, there's only one way to get that experience, or actually 2 ways to get that experience, right? That's what I was trying to say. It's you hire it, or you have to wait a long time, right?
You're right. Or you make mistakes, and you're like, I learned this lesson here. So if you can learn from others' mistakes, that's much more beneficial.
What's your best source for meeting new investors right now?
So we have our local meetup in Pasadena, California. We meet people there, honestly, just through content. I mean, I create 10 videos on YouTube a month, doing a lot of speaking at events or being guests on podcasts or different things. So I think it's just continuing to put information out there, trying to find ways to be helpful, create resources. We also do a monthly panel called the Bronson Equity Monthly Investor Series. And we've had some kind of McElroy and some of these big time people on these panels. And so it's been really fun. So that's a great way. We'll get a few hundred new people that join our group just through that every month. So that's been a real positive for us.
What about your best tip for passive investors? Just one.
Oh, man. Well, I think the best tip for most passive investors is just to look at 5 or 10 deals and invest in something. Like, as most passive investors don't actually pull the trigger and do it. And so I would say just one is take action. I would say the second thing is kind of part of this is be willing to go to a meetup or go to a national conference, because it's work and it's time and it's effort and it's money and it's, time away from family, whatever. But if you go, you're going to meet people that are very serious about real estate, and you may even meet other, passive investors. If you meet a full-time passive investor, somebody's been doing it, it takes it from, oh, I've got this idea to like, oh, here's this person that can become a resource and a mentor. So if you're a passive investor, knowing other passive investors is incredibly valuable, because everybody in real estate in general, you and I included, we have something, we have a deal, we've got something to show people. And of course, we're trying to do it in a way that's very high value. We're not trying to, obviously if it's better to work with someone else, I'll refer people to other people, and that's great. But I have something that I'm selling, right? A passive investor, they don't really have anything to sell, right? They're just simply there to help, and they're there to be around. So I think if you can kind of get around like-minded people, you can help each other a lot. And that's a very transformational relationship. What are
some of the most important metrics that you track? And it could be personally, professionally, it could be your bench press record, it could be the numbers of the mornings you get out of bed on time, or it could be the number of deals that you are analyzing. What are some of the most important metrics to you?
Yes, they're great questions. So I'm a big goals guy. So I read my goals every morning. I go through affirmations every morning, just things that, and some of them are spiritual, things I feel God's spoken to me, or just scripture. Some are very like, okay, for this year, I'm going to do this. I just finished a Spartan race. I did a 13-mile Spartan race a couple of days ago, and I finished 8th of 64 for my age group. So I was very proud of myself. It was very hard. It was very hilly. It was tough, but I was proud of myself for that. One of the metrics I keep track of is how many books am I reading? So I've read 65 books this year. My goal was 60. I think I'm pushing that to maybe 75 or 80. But I think people that want to grow, They're always reading. They're always learning. Brian Tracy says, if you want to earn more, you've got to learn more. And so, and I know you're a reader as well. So just being able to being somebody who reads in the business, we look at, how much money are we raising? How many calls are we having with investors? Just things related to our deals. How are they performing? What is our metric? What sort of returns do we have so far in the deals that we have or exits that we've had? So we're tracking all that stuff. But at the end of the day, on the business side for us, it's more how many investors can we engage with? How many people are investing in our deals? And how much money are we raising? Because that's really what we're trying to help people become financially free. And we do that by getting people to actually invest in deals with us. And we feel like having that actual financial investing relationship can be very transformational for a lot of people. So we do measure that.
What about any habits that you are disciplined about that have produced the highest return for you?
Oh, that's great. Well, the reading is definitely one. I would say trying to do almost a daily workout every day. I lost 30 pounds about 5-6 years ago and I've kept it off. So that's been super helpful. I would say, there's a lot of things. We could talk about spiritual life, doing a kind of a devotional each day or reading the Bible, or I have a weekly men's group I meet at my house. Actually, we're meeting tonight. So we meet every single week and doing that for 5 years. You got 8 or 10 guys that show up. And I think, especially for men, I think just being in a place where you have other guys that you share on a character level, there's a confidentiality in the group. People share on all kinds of things. Most guys get to be 30, 40, 50, and they're kind of alone. Like there's really nobody, they have other people they do activities with, but they don't have people that really speak into their character. So I think that's something that if anybody's listening, really making efforts to develop character friendships that people can speak into and that you can speak into their lives.
I think it's incredible surrounding yourself with others who can speak into your character. I like that. I like that a lot. And we crave that fellowship, whether you admit it or not, right? And we need it. And it's great and be around other guys you can trust and just be real with, right? We're all struggling sometimes or some way, and it's great to have that support. So appreciate that. Speak to your reading habits a little bit, how you read that much, that fast. Share some of that.
Yeah. So kind of basically use two methods. One is I do a lot of audiobooks. Some people say that's cheating. It's not the same. It's like, to me, I actually retain pretty well when I listen to audiobooks. And so I typically, when I find, and I learned this from my uncle, actually, story-based books, I listen to a lot of biographies or sometimes memoirs or stories. They're great to listen to. And then things that are more informational, things that are more just facts or personal development or other kinds of information books, I like to read those. So I'll try to, when I go out for a workout or a run or a walk, or I'm in the car, I'll listen to stuff, and you can actually speed it up where you go, sometimes 2 or 3 times faster than the book actually reads, which so in the beginning it was a little stressful, but then after a while you kind of just get used to it and you'll be able to absorb it. Or I usually do about 10, 15 minutes a night just where I sit and read. And the more you read, the faster you get at reading. But there's people that like Warren Buffett, Mark Cuban, these guys read a couple hours every day, right? Teddy Roosevelt, the president, he would read a book every single day, 1 or 2 books a night. Like he would schedule an hour and a half, couple hours at night, and he was a really, really fast reader. So I think just the idea of like a book becomes a tutor for you, it's a huge return on your time, because it could have taken somebody hundreds or even thousands of hours to write this, and you can read it in a few hours, which is pretty amazing.
Yeah, no, I appreciate that. I'd love to read more or take more in. I'm always struggling with like, how much time should I spend on this? Where can I find time to read more? Because I agree completely. It's like a mentor right there in your hands, practically. You don't get to ask questions, unfortunately, but somebody, like you said, I haven't even thought about it like that. Somebody has spent thousands of hours potentially pulling all this together for you. And here you go. Yeah, I love that. Trying to encourage my kids to love reading, right? I did not think I loved reading growing up, and I'm the lesser for it. So, but Bronson, what about number one thing that's contributed to your success?
The number one thing, I can go on 2 levels. I think from more of we're coming from a spiritual level here as well. I think just really God's plan for my life. I think being responsive to that and just really leaning into, okay, whatever you want, God, you want me to sell everything and move to India and be a missionary? Just having that level of like, money is not my primary thing. I want to make a lot of money, but it's because I have a cause I want to make a difference for. I really want to help end human slavery, modern day human slavery in the world. And there's 20 to 40 million human slaves today. And that's a big, hairy, audacious goal that what could one person ever do? And it feels totally overwhelming. But I feel like that's a cause that God's really put on my heart. So I think that's one thing. From a very practical level, though, I think there's really a couple things. One has been networking. So getting in the rooms with people that are better, smarter, have done more at the next level, 5 steps ahead, whatever it is. So networking and trying to find and create value. And the second thing is education. So it's really those two things together. If people, there's a quote by Charlie Tremendous Jones, and he says, "You'll be the same 5 years from now, except for the books you read and the people that you meet." Books are awesome, but it's also the education, it's the YouTube, it's the learning, and then it's also the people that you're connected to. So those two things, if you do those two things well and you get around in the right rooms and you educate yourself and you're learning, like, you will do phenomenal things if you take action.
Yeah, love that. I love that saying also, by the way, the books you read and the people you surround yourself with. So true. What about, how do you like to give back?
Yeah, so through my church, I'm involved there, but really, like I was talking about with, there's an organization called Dressember, and it was started actually a number of years ago, and it basically is to help for that cause to try to end human slavery in the world, human trafficking. People can go to dressember.org and figure out. There's also some information on my website, Bronson Equity, about that. So I love them, and I serve on the board there, and I just really am passionate about trying to, maybe for one area of the world, just saying no more. Like, this is not okay that this human slavery, human trafficking stuff exists, and it exists really in every city of the world, including the US. And so it's all over. And a lot of times we just don't necessarily want to see it, but it's everywhere. And so the more we can create awareness and really try to help that, I think it's just a huge passion of mine.
Appreciate that. Appreciate you sharing that, even raising awareness through us and the listeners as well. I think you hit the nail on the head too. When we think it's not around us, we think, oh, it's that other country or that other town, or it's not. It is everywhere, unfortunately. Yeah, a few years ago, I'll never forget, long story short, my sister was telling me about an abduction, even in this small town in Kentucky where they lived. Once that happened, there were so many things that were learned about this like whole operation in this little area. It was scary stuff, right? But all that to say, man, I didn't want to be blind to it, right? And I love that you're raising awareness for that cause and helping in a big way. Bronson, it's been a pleasure to meet you, get to know you better, and be with you for quite a time here and do numerous segments. So grateful for your time. I know the listeners and I both have learned a lot from you and are encouraged by you. And so how can they get in touch with you again? Tell them again about your book.
Awesome. Thanks, Whitney. Really great to be here and just great to connect with you. I love all the value you're adding to the community, and you're doing it from such a great place. So thank you for all that. This is my ebook. It's How to Use Inflation to Your Advantage. 52 color pages. People can grab it at bronsonequity.com. It's a free download. I'm also social media. People can reach out to me on LinkedIn, Facebook, Instagram, any of the channels. So look forward to connecting. But thanks again for having me.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.